Today I saw the error in my ways. But give it up, a lesson learned and $1 earned. All right, so I'm not mad at that. So here we are at the open. We went ahead and filled in the gap like we always do on this channel. That is the key core foundation that I want you guys to take away. We went ahead and picked a shorter dated expiration. We did the next day, so 1 DTE, which gave us a higher delta as well as a higher theta. So I did a good job being patient. You've been watching the last couple of days. I've been a little anxious and antsy at the open, so I've been jumping into this first candle. Today I exercised patience, so give it up for your boy. I did not enter. I allowed for the pullback to happen, and this is where I felt I had the intuition to enter right here. But instead, I wanted to wait for confirmation. So you see, I got my finger over the buy button, but I waited a little longer for confirmation. Right when that candle took out the top of that red candle, we entered, and then we rolled that up for 1 push, 2 push. These aren't even really pushes. So what I'm looking for right now is 20% return. However, looking back at the video, I'm thinking I should have focused my efforts on just making that new high. We're already at the top of the range. We gapped up from 93. We're pushing 98. That's pretty much our $4 or $5 range. So because we're at the top of the range, and if we look how far we are from our 21 period moving average, we're anticipating a mean reversion. It looks similar on the 15-minute time frame, similar on the daily time frame. But here I am just focusing on 20%. And because I'm focused on 20%, I lost time and effort. So right here, what I did well is instead of snatching at my profits, I moved my stop loss up, which I should have been doing, but the last couple of videos I haven't been on point with that part of the process. But today I did that well. So let's go back over. I brought the stop loss up to the bottom of a big bar and a moving average. All right, so we got the 8 period moving average and this power bar that's being formed. Now I would have scalped that, but I've been watching some videos from my mentor who's saying that we shouldn't be taking profit on big bars. That's been working for me. All right, so I decided to see what that was looking like. But today I wish I would have gone against that. Today, I wish I would have scalped that profit right at the top and went with my flow. So sometimes you got to strike that balance between, understanding the advice and understanding what comes natural to you. So that fast-paced scalping, especially when I got 1 DTE, because all of these little moments that this red bar is forming, the theta is eating away at the value of my option. So here we go. So I set my stop loss here. And we are waiting for this pullback to happen and for a continuation to the upside. But remember, we already picked a new high. And in a previous video, I told you our price target is 20% or a new high, 20% or a new low. All right, so in this case, we got our 20. We didn't get our 20%, but we got a new high. And we didn't take profit at the new high. And then what did we get? A bearish reversal. Nasty. And if a bearish reversal is a signal to get into a put, then that should also be your signal to get out of a call. All right, don't let that go over your head. Your entry signals should also serve as your exits. Okay, so if you're in a play and you see a signal to enter a play that you would if you weren't in one, that might be the sign to get out of the one you're in if it's going in the other direction. I hope that's not confusing. So, boom, first problem of the day, I blew my stop loss. And why did I blow my stop loss? Well, there's never a good reason to blow your stop loss, but I did feel like this bearish reversal was overextended, so I added a contract at the bottom because I was convicted that we were going to continue to the top. Now in the moment, I'm thinking that this is a higher low. I also was anticipating some bit of a bounce back from hitting this 13 period moving average. So I took profit on one contract, which wasn't a bad idea. That actually was pretty good. I got in at the bottom and I scalped it on the way up. So I made a quick profit off that second contract I entered, and I brought my average cost down on the first contract. So now as we approach 697.84 again, I'm back at about the same range that I was previously, and I just put some money in the bank because I scalped that second contract. But what I should have done is notice this head and shoulders pattern forming. As you can see, we got the head and the shoulders, but in a moment, I'm not thinking about that. I'm committed to trading in the same direction as the 21 period moving average. So my moving averages are pointing up. So I'm thinking again, we're going to come back and we're going to hit this 21 period moving average, and then we're going to continue to the upside. That's just me focusing on the moving averages and not focusing on the pattern that's formed right in front of me. So we came back down again. I added another contract, anticipating us to continue moving up. Here we are. So now we start to stall out a little bit, but so far so good. I didn't cut a play, but I rolled that wave pretty good. So in a moment, I didn't feel like that was that great, but looking back at the trade, that was pretty good. The only problem is I'm on the wrong side. Like if I'm at the top near resistance, I want to be scalping those puts. I don't want to be scalping the calls up towards resistance, and that's what I'm doing. I'm in calls scalping every time it scrapes the top towards resistance. I should be earning off the red moves to the downside, and look, this is how I get scorched. So boom, I'm in those two contracts again, added on the interrupt. As you can see, that green candle right in the middle of the trade of this move down. Hey, that's where I bought my last call at. So I got cooked on the interrupts on the way down. We're down, but I added, once we hit the 200 period moving average, I added a third contract. Why? Because this crash into the 200, we normally get a solid bounce. So we got a nice bounce on green, a nice bullish bounce, as you can see. So part of this isn't, in some cases, yes, I'm blowing my stop loss, but I'm also convicted based on the movements of the chart. So there's I can see how a time will come where that could cost me, but I'm also seeing how it's keeping me alive as well. So that's a slippery slope. So here we are. I scalped one of those contracts and took a smaller loss once we got down to 30. So I scalped one, I gave one back, took a $9 loss on that one. Here we are on the second contract. I'm expecting a bounce up to at least the 21 period moving average. I scalped the second. I gave a second one back. All right, now here we are with the last contract. Here we are with the last contract, looking for a move back up. Looking for a move back up to the 21 period moving average so that we can get out of this play. Because that's about, and if you pay attention, that purple line where I should have got out of is now my price target. So look, and we scalped and we got out of that last play. So we took a loss on those three contracts to the downside, but we caught this bounce back up and was able to minimize turning that $50 loss into a $10 loss. Okay, and now we are looking to finish what we started. So here, this is the thing. This crash into the 200 is gonna bounce. This play consistently happens. It bounces off the 200, comes up, and then basically it gets intercepted by that 21 period moving average. I talked about this in another video as well. This particular play, it bounces off the 200, it gets intercepted by the 21, this gold line, and then it's gonna run us all the way back through the 200 again. Okay, so that's what we're looking for. And that's what we did. We entered that put right when they hit the 21 period moving average. And now we're looking for continuation to the downside. So at this point, all of that energy and work we've done, we are broken even for the day. So we just spent an hour trading to no avail. Why? Because we took 2 good scalps and then we blew our stop loss on the 3rd trade and we had to doctor it up. So that required us to use buying power that now is no longer available because we're trading in a cash account. So now we're almost out of trades and we entered our final trade on the way down to hopefully end this morning session profitable. And again, the worst, cutting my loss is probably the one thing that there's no workaround. I mean, there's no better way to save your time than to cut your losses. Because even if you end up doctoring the play, adding to contracts, dollar cost averaging when you're down, you spend time recovering from a play when you could have been investing into a better opportunity. So here we go. Boom. Like I said, crash back into the 200. We're going to take profit here. Don't forget to visit stockmarketdaddy.com and take the assessment to see if you have a problem gambling. Please subscribe to the channel, comment down below, and leave a like. And let me know if you enjoy videos like this so that I can continue to provide my trading playbook for the SPY. All right, peace and love, and I hope you get rich. I'll see you in the next video right after we take this profit.